Hey guys, welcome back to the channel. So today is going to be a bit more of a trade breakdown. It's not something I do too much on this channel. However, it's a trade that I think is quite interesting and has quite a lot of potential. So this is euro dollar. So I'm currently in a sell position already. So this is a starter position. And anyone that's new to my channel or doesn't really watch me too much, then you probably won't know. But my regular viewers will know that my general risk is 2%. That's normally what I risk on a singular trade. Normally, when I go in for a trade, I will place an initial position and then I will scale into a second position, especially if it's a longer term trade like this one that I'm looking at on euro dollar. So you can see I've placed my initial entry here at 1% risk. Now I've got another entry. This isn't a pending order. This is pending in terms of I'm still waiting and watching for this level. This one will also be 1% risk to round up to my full 2% risk. Now I do have a stop loss obviously up here above these previous highs. And you might notice we have this yellow or orange line down the side. Now this is marked for the 12th of September. Now on screen, what you can see here is a software called Seasonality. Now I don't have any affiliation with them, no connection whatsoever. So this isn't this isn't some sort of promotional video or anything. This is just showing you what I'm looking at. So over the past 10 years of data here on euro dollar, and we take this from the 12th of September up until the end of September, so around the 27th. So sort of the mid part of September, we can see we have a huge decline. So if we were buying euro dollar during this period, every year for the past 10 years, we would have won one trade and lost 9. But of course, we're looking to go short. So for us, this means we would have won 9 trades and lost 1. So you can see we have the max drop and the max rise here. The max drops are more significant. So you can see here negative 2%, negative 1.78, negative 1.86, even negative 0.5, even 5.2 here. And this was in 2022. So this data is reliable. You know, it's a historical data. Now, if we look at the chart, you might see down here we have our take profit, and this has in brackets Crédit Agricole 1.06. Now, where I got this from was a bank report. So if we look here, this is my document. I send this out to the Discord members every 1 to 2 days when there's something new that needs updating. And I list out what trades are any of these institutions in. So we get them from, Crédit Agricole, Goldman Sachs, Bank of America, ING, MUFG, etc., all the major institutions that are worth listening to, we get access to them. If you want access to profitable signals with professionally written trade ideas to back these trades up, and to learn real trading standards with technical analysis and geopolitical and macroeconomic education with our videos and PDF resources, live webinars, and our proprietary research documents sent directly to you, then you can join our private Discord at elitetraders.io. Anyway, back to the video. So Crédit Agricole is in a euro dollar sell position with an entry at 1.1051, a target at 1.06, and a stop at 1.12. So we know seasonality is in our favor, or coming up in our favor to short. We have Crédit Agricole, which is a pretty reputable institution to follow. They've won awards on their analysis. Now, if we scroll down here, we have a trade idea. So these trade ideas, again, these are built by Elite Traders, by myself, and sent out to our members. And these are built from all the information that we get in these bank reports and aggregation. From the aggregation we do from the bank reports. So if we look on the euro dollar short here, I'll read this out. Inflation and European Central Bank policy. Eurozone headline inflation is declining and core inflation is only marginally increasing. Lower than expected inflation data from Germany and Spain has led to dovish expectations for the European Central Bank, increasing the likelihood of rate cuts. Economic indicators. Eurozone flash PMIs showed mixed signals with manufacturing, contracting and services, showing resilience but slowing momentum. Weak GDP growth estimates and disappointing economic data from Germany and Spain further weaken the euro. Sentiment analysis. The Bank of America Bull and Bear indicator indicates natural or neutral sentiment, with market hopes for Fed cuts being as bullish as it gets. If the ECB proceeds with rate cuts while the Fed remains cautious, the EUR or the euro could weaken against the dollar. Technical levels, we can ignore that. Recent performance, the euro has underperformed following various CPI prints, particularly weaker than expected German inflation data. So this relates back to this point up here. The market is pricing in less than one ECB rate cut by the end of the year, which could lead to consolidation or further decline. So if we take that into consideration, with the dollar moving the way it is, now we are seeing some slight bearish movements on the dollar today, but that's irrelevant for the longer term. So we do have NFP on Friday. We also have unemployment on Friday. Now let me pull up the data for you. So here we have the NFP numbers. So we get NFP results the first Friday of every month here. So you can see 114 was a bit of an anomaly. It was a shock to the market, really. We did see, this was the lowest print we've had since January the 6th of the 6th of January 2022. 2023. Now we have had pretty positive data out for the US last week. Now, leading on from that, it signals to me that we could see a slightly higher NFP print. I am expecting sort of a 160 print. Now, if we look here, this is the investing.com economic calendar. Their forecast also for NFP is 164. Now, that's pretty close to me. I'm expecting around the 160 mark, roughly in that sort of area. Now, 160 would signal a pretty robust labor market for the US, which would be pretty positive. Now, we do also have unemployment numbers on that same day. So we have unemployment right here. So if unemployment also drops to 4.2 from 4.3, that again would be a pretty positive signal for the US labor market. So my point here is I've just realized my camera's in the way of this 114. I'm sorry, I've been sort of hiding that. There you go, 114 right here. So that would signal a more robust labor market, leading me to think we are heading more for a 25 basis point cut. So for the dollar, it seems as though we've had a 50 basis point already priced into this market. We've had a huge decline. We had a 5.3% decline since June on the dollar, with very little upside, really. That's my thesis. I think we're going to get better numbers out of the US. I think we will still have a rate cut. However, it won't be as aggressive as the market is priced in, which is leading me to think that we could see euro dollar start heading to the downside. Now, if we pair that with the euro data we've just discussed and the fact that Credit Agricole is also in short positions, along with the seasonality, this could be quite a nice trade that we could start looking for. So as I said, I've already got my starter position here. I am looking to get into a secondary position at some point. Now, this level is more of a guideline, this entry 2 level. I may not enter here. I'm more looking to enter when we get closer to around the 12th of September. So any level sort of in this area, if we are around here, would be great. The reason I have my pending order, or like the area of interest around here, is just because this will be a really nice break and retest. So we can see we've got this support level through here, break to the downside, retest, and continue on. So that would be sort of the ideal play here. Now if we draw the fib, it almost lines up. It's not perfect. As I always say, the markets aren't perfect. So this level is so far, it's fine. I'm happy to work with it. So yeah, we'll see how this goes. This hasn't been, a super edited, super entertaining video, but I think it's something that people might get some value out of, to sort of see some of the process behind trades, some of the thought processes, and some of the things we actually look at when we go for trades. Because we, at Elite Traders, we don't go for, support here, buy, or resistance, or order blocks, or FBGs, or any of that nonsense. We do real trading here. It's based off a lot of historical data, current market drivers, and are also forecasts and bank reports, institutional information, and obviously institutional orders that we've got here by Credit Agricole. So I wanted to bring this to your attention. So yeah, enjoy. Maybe you can make some money off this idea, but it's not a signal. Let me make that very, very clear. I may not complete this trade. I may end up closing out a loss, or break even, or even profit. Either way, you make your own decisions, do your own research as always, and I will speak to you later. Thank you for watching.